Apartment occupancy remains in great shape in the Ventura Oxnard area, but like most of Southern California, we aren't seeing much rent growth. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Ventura Oxnard update. So Ventura Oxnard is the market just north of Los Angeles. It's basically an extension of the LA market, but we divide it into 5 submarkets of its own. Let's look at what's happening on the occupancy front, and you can see the story pretty clearly here. That is that occupancy hasn't changed much at all over the past 3 years, consistently around 96, 96.5%. Not much movement, not many vacancies, good to see. Down a hair though in Q1, 30 basis points, but still in strong shape, 96.3%. And vacancies at this point are limited across most of Southern California. LA shares the top spot in the region with Ventura Oxnard at 96.3%, followed pretty closely by San Diego and Orange County, both just below 96%. And as usual, the Riverside San Bernardino area trails the pack, just 94.3% occupancy over there. So aside from the Inland Empire, vacancies haven't been an issue, and yet rent growth has been fairly limited all across the SoCal region. At the top end, LA is getting just 2.6% year-over-year rent growth. That matches the US average. Orange County, San Diego, and the Inland Empire all around 2% or so over the past year. And the Ventura Oxnard area at the bottom of the list rents up just 0.3% year-over-year as of Q1. Now, it is a little bit of a disappointment to see rent growth levels dip this far. Take a look at the annual rent change numbers in Ventura Oxnard dating back a few years, and you can see that this market has had some nice growth in spurts, but it just hasn't been able to sustain solid growth. Then this is probably what we're going to see going forward as well. We don't think the current number of 0.3% is overly concerning, probably just the latest shift in a seesaw pattern. And when we break down performance by submarket and by product class, there really isn't a clear outperformer or a laggard. Let's look at the 5 submarkets, and you can see all of them have occupancy rates in good shape, right around the metro average of 96.3% or so, but limited rent growth across the board. At best, Camarillo, 2.5% growth in rents year over year. The others came in at 1% or less, with slight cuts in Thousand Oaks and in Oxnard. Now, one of the big issues limiting rent growth potential all across Southern California has been affordability. Now, we are finally seeing some decent job growth in most of Southern California, but so far, many of these jobs have been going into lower paying employment categories, which just limits how much apartment operators can raise rents. And that's the case in the Ventura Oxnard area as well, and we expect to see a pretty similar pattern here going forward. So with the economy in decent shape, but just not showing good growth in higher paying jobs, we do think occupancy should remain in that range of 96, 96.5% over the next year. Rent growth should go up and down again as it has in the past year, probably averaging around 2% or so on an annual basis. And that wraps us up for Ventura Oxnard. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.